I've been on this trade for a couple of days, and I always tell you guys on some of my videos that I'm a swing trader. So what I love is I love to be on a trade for 2-3 days, so then I forget about other things and just focus on that particular trade. And I love doing that, and I also love sharing that. It's unfortunate I can't show you the results of the trade that I'm in, because I need to open other applications so I can show you where I posted it. But yeah, let's discuss about this pair. So we've got GBP CHF right here, and so I'm actually in a sell on this pair, and how I got about selling this pair is pretty simple. So I'm gonna do a short video, but it's gonna be very fruitful. So now looking at this, you can see that we've got a double top, and the market went down, and after that the market retraced back, and the market is supposed to go down. It might get to this low, it might end somewhere, anywhere, wherever, but at the moment the market is going down. All right, so this is the kind of pattern that you have, whereby the market pushed up, came down, formed a peak, and then it is reacting on the neckline there. And I also love to put other strategies in place so that people can understand, also those who are embedded in other strategies. So as you can see right here, probably you are an ICT trader. You can see how the market actually formed the first leg here, formed the second leg there, and then after that the market traded away, and after trading away the market came back to this order block right here, and the market has been reacting to that order block, and it is now starting to trade all the way down. And again, now looking at this, if you want to try and understand maybe on premium and discount things, when you're looking at ICT, you just put your fib level on the highest point and push it all the way down. So the rule of thumb is that you are only worried about everything that is on the other side. Let's say you are going down, you are only worried about what's on this side, okay, not what's on this side. So you wait for price to pull back until it gets into half of this area, because you wanna sell when price is high and only buy when price is low. All right, so you wanna buy cheaper and sell when price is high. So in this instance right here, you can see your order block, which is your neckline, is actually sitting at the right spot, which is on the other side. Then the market is reacted there, and we expect the market to go down. But I don't want to confuse you guys, so let's just stick to BTMM. So now this is the pattern that you have. You have your M formation, and this is what I had, and then I had price coming back up. Now if you go to the 1 hour time frame, you'll find there's a peak formation right here, but for me to identify this, I had to drill lower into the lower time frames. So I had not seen this railroad track right here, so this was all before. So now if you go to D1 time frame, you realize that on D1 time frame the pattern is somewhat bigger. So being bigger, you obviously expect to see an M formation at this point, which is you have a peak formation, and after the peak formation with a structure of a W at the center, which makes it even good. Now going down, coming back there, all you are waiting for is to see a point where a high does not get taken out, so which is at this point where a high wasn't taken out and the market started going down. I know this is hard for some people again, and if I'm gonna count levels maybe from higher time frames, I can just literally say this is my level 1 and I'm expecting to see my level 2 and my level 3. So all I'm dealing with here is just a structure. All right, I'm only dealing with the structure of the market. So if I go to the W1 time frame and do this, okay, and say, right, the market printed out the high, printed a low, printed out a lower high, and then printed a lower low, and then the market came back into the range between these two and printed out a high. So what do you expect? You expect the market to print a low. All right, so that's what you expect. You expect the market to print a low. So that is the market structure. All right, you expect the market to print a low. That is the market structure. And you know that for pullbacks, or for those who don't know, pullbacks, we generally expect them to be at the 52 or 61 level, which in this case, if you look at this, you can find that the market pulled and then came back to the 61 level right there. So that's 61 level where we expect the market to pull back. And like I said, you can use the Elliott wave theory, you can use ICT, you can use whatever you want, price action itself. It will all show you that this market is a very strong sell. Hence, we've got an order block there, or a neckline, whichever you want to call it. You've got a structure of an M there. Now you do have a railroad track and you are expecting the market to go down. Now if we go to the lower time frames, that means we need to see something different, because we've got a lot of noise there. So look at the 4-hour time frame. This is now where it gets interesting. And I always say, if you see a structure on D1, let's say it's an M like this, right, and then the market does that, don't just think the market will just pull back as a V on smaller time frames. On smaller time frames, the market will actually create a proper structure. It will create a proper M. All right, you're not gonna have a single V on H1 and then just trade away. It's gonna be a proper M. So you can see right here how the market has been dancing around at this point. The market has just been basically in one spot, ranging there. So we're actually waiting to see if the market will break out, retest the area, and then continue to go down. Now that will mean if the market does that, it will then be a reset, because remember, we've already done a level and another level. So if the market gives you last level, it will then reset and then continue going down. But we will see that from the 1 hour level. All right, from the 1 hour time frame. So you want to see a structure on that end there. You expect to see a structure on here. All right, you want a structure to appear, even if you do have a V like on higher time frames. Smaller time frames to give you a structure. So now, after I'd seen all this, going into H1. So now, before we go to H1, if you look at H4, you'll find that H4 does have that structure right there. Information. Again, the same thing you're viewing on W1 is the same thing you're viewing on H4. Look at that. Drop and then go up, and again on the same neckline. All right, the market then went down. Now looking at it from the fib level, if you put your fib, you realize that you should have a similar set. Like this is how it is now. That's a 61 point. If I measure with the current low, if I measure with this low, you're actually at a 50%. So your pullback was actually at a 50%. So this is how you could have seen it with a fib peak formation going up, and then as soon as you get to the 50% and the 61%, then you expect a reversal. But it was probably gonna be hard for you to catch. So this is what we did. I'll show you, because I wasn't expecting the market to go that far to start off with. So if you look from the H1, I actually took the trade. At this point. I took the trade at this point right there. This is where my entry is, and the market actually went up to test that neckline before it went down. And on the very same day, that was a Friday, I got tripped out, and I did not go out because I was expecting the market to sell. And then I think that was a Thursday, and then on a Friday, that's when the market started falling down, so which was very good. So I'm expecting that today the market goes down, or rather we test the high of yesterday before we go down. So that's actually a good trade for someone to take, because we need to see that level 3. If we are counting our levels, you see that we are in level 1 drop, level 2 drop, and we want to see level 3 drop. So we haven't seen level 3 drop, and we suspect that our level 3 drop might possibly match out with this low right here. So this is where we expect our level 3 drop to be, and we expect the setup to form at this previous high. So I would be happy to see the market stop hunt to that and go down, all right, for the day. So now if you do correlation, all right, of pairs or disparity of pairs, whichever way you want to put it, because this is GBP CHF, that means either GU or USD CHF will consolidate or won't have an effective move, all right. So either of them will be weaker in order to push this one all the way down. That's one thing that you realize happens. So one of them has to be weaker, one of them has to be stronger for the day. So for you to then predict what's going to happen, check which one moved a lot the previous day. They're probably going to hold that one and move the other one in order to get this level 3. All right guys, so this is the setup that I'm holding. I didn't take it from the peak, I took it from here, and I've been holding it with my stop loss locked in profit, and my expectation is that I take profit right there and then wait for a reversal into a reset and then a drop further down. So thank you very much guys. I hope this makes sense, and I hope this does help someone who's probably wondering how to do market analysis. So this is just a rough market analysis of how I took this trade, and I've been also on CHF JPY, because one rule about me is that I trade only one type of pair. Or what do I mean by that? I mean whatever I'm trading should be common. So that's what I do. It should be common. For example, if I'm trading GBP CHF, I should be trading CHF JPY. If I'm trading AUD USD, I should be trading NZD USD. It becomes easier for me to analyze the same set of pairs or pairs that correlate and then risk whatever I risk. I know some people have got different opinions about that, which is fair enough, but that is exactly how I love to do my trading. So on Chef JPY, I was on a buy here and I took it here on the ID50 on 15 minutes, and I held it until it came at this point. Then it started reversing on me and I closed right here. So this is where I closed and took out my profit. Then it went back up the following day, and from there it started going down because I was watching USD JPY. All right, I was watching USD JPY, so that's the reason why I had to close my trade. But it was also a good trade. So, and my advice again would be, if you are trading this, you're supposed to also look at USD JPY. It will help you to kind of understand what the market is actually doing. All right, guys, thank you very much, and I hope this is helping some of you out there who are kind of confused as to what to do. And again, watch out for our YouTube live with a flyer that's going to be coming out soon, and we're going to have some exciting times discussing about the strategy, how to go about this. You're not going to have wins all the time, but your success rate is supposed to increase, and the amount of times you click buy or sell on the market have to decrease, and you will see tremendous results. So I hope you guys are gonna enjoy these festive seasons. I will chat with you soon.